Closing the books on Monday's session, and the first trading day of December came with a bit of a post-holiday headache. According to reporting from MarketWatch, U.S. stocks kicked off the month in the red, with the S&P 500 stumbling after last week's sharp rebound wiped out November's losses. So the tone today, a little post-Thanksgiving hangover, some risk being trimmed, and a market trying to find its footing after a big snapback. Let's start with that big picture setup. After a powerful move higher into month-end, a lot of traders came in today wondering if we were overextended. The answer, at least for now, looks like yes, a bit. The pullback we saw fits the classic pattern. After a relief rally, you get a day or two where investors test whether the bid is real or just short covering. That's where we are. Rotation under the surface, but not an outright panic. One of the more interesting corporate stories in that mix came from Apple. As Emily Berry at MarketWatch highlights, Apple is making a notable shakeup in its artificial intelligence push, bringing in an outsider to lead its machine learning research and foundation models. For a company that's been seen as playing catch-up in the AI arms race, this kind of leadership change is a signal. Traders will be watching whether this suggests a more aggressive AI roadmap that could eventually impact everything from iPhones to services revenue. It didn't rewrite the tape today, but it adds a fresh chapter to the ongoing who wins AI debate that's been driving so much tech price action this year. We also saw a pop of strength in a very different corner of the market narrative: personal finance and housing. One of the most read pieces today from Quentin Fottrell at MarketWatch focused on a family considering buying an impoverished brother's house and letting him live there for free. That might sound far from Wall Street, but it speaks to the larger real estate and balance sheet questions many households are grappling with. How to use property as a safety net without blowing up your own finances. Those kinds of stories tend to bubble up when rates have been high, affordability is tight, and families are trying to get creative. It's not about a ticker symbol. It's about the backdrop that shapes how much risk investors are willing to take in housing and consumer stocks. On the flip side, one of the clearest pockets of stress remains in crypto. Isabel Wang's reporting points out that Bitcoin has been sliding, and at least one technical analyst is eyeing the potential for a short-term turnaround as soon as Tuesday. The key word there is potential. When you see technicians talking about a reversal after a sharp drop, it usually means levels are getting oversold and short-term traders are watching support zones. But the broader takeaway is that volatility in Bitcoin is still very much alive, and that can spill over into listed crypto equities, miners, and even high beta growth names. This is an area to handle with care. Big intraday swings can cut both ways. We also had a notable sector-specific shock in healthcare. Jamie Lee at MarketWatch reports that vaccine stocks slid after an FDA official pointed to a link between COVID-19 vaccines and a rare heart condition in young men, with the memo also mentioning flu and pneumonia vaccines. Now, regulators are still parsing data and causality, but the market tends to shoot first and ask questions later on headlines like this. For vaccine makers and broader biotech, this introduces another layer of headline risk. Traders will be watching for any follow-up from the FDA, potential label changes, or further studies. Until we get more clarity, that theme looks fragile and prone to further volatility on any new news. One story I'd put firmly on the watch carefully list is out of Japan. Vivian Liu Chen's piece lays out how comments from Bank of Japan, Governor Ueda about a possible rate hike this month rattled global bond markets. Here's why that matters for U.S. stocks. If Japanese bond yields rise and the yen strengthens, global capital that's been flowing into U.S. equities and treasuries could start to drift back toward Japan. That can put upward pressure on U.S. yields and raise the hurdle rate for risk assets here at home. It's a classic sleeper story. Most U.S. investors don't wake up thinking about the BOJ, but the policy path in Tokyo can quietly reshape global liquidity conditions. Elsewhere in the consumer and media space, Hollywood finally caught a break. Lucas Alpert reports that Disney's Zootopia 2 set a record for an animated film opening, while Universal's Wicked sequel continues its strong run, despite weak reviews. For media and entertainment names, a healthy box office is a welcome sign after months of disappointments. It feeds into the narrative that the consumer is still willing to spend on experiences and premium content, even as they tighten belts elsewhere. That's not a guaranteed uptrend for studio stocks, but it's a reminder that hit-driven businesses can still surprise to the upside. We also saw some personal finance angles gaining traction. Andrew Keshner highlighted a new way some taxpayers could shave hundreds of dollars off their bill by timing their charitable giving differently under fresh rules. Again, not a direct market mover, but when tax optimization, inheritance planning, and elder care issues dominate reader interest, as in those MarketWatch advice columns about laundromat inheritances and aging parents, it often reflects a late cycle mindset. People are focusing on protecting what they've made as much as chasing what's next. So what does all this mean for tomorrow? First, we're coming off a shaky start to December after a strong rebound. Expect traders to key in on whether that was just one day of profit taking or the start of a more durable consolidation. Second, crypto and vaccine-related names will be on watch for follow-through moves or sharp reversals. And third, any new headlines out of Japan's central bank or additional color from Apple on its AI strategy could nudge sector rotation yet again. We'll be back ahead of the bell in tomorrow's pre-market coverage to set the table for the next session and see how futures are digesting today's news and any overnight developments. Remember, this is information and education, not personalized financial advice. As always, I'll be here to keep clarity through the chaos of these markets. On behalf of Storm Stock Solutions, I'm Grant Mercer. Stay sharp, stay steady.